What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is January 6th of 2025. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to start the new year off with a pretty serious tone. I want to have a one-on-one conversation here about the current state of crypto markets, as well as the topic that I don't see anyone really focusing on, which is global markets. There are a lot of concerning signs that I'm seeing. Not only are a lot of people hyper-focused on where the short-term action is in Bitcoin and altcoins and the more high-risk areas such as meme coins, but I see a lot of people ignoring what's going on in the macro stage. And this to me is a really grave sign, because we're seeing a lot of worrying things that we should be keeping on our radar. I'm not here to say that the market's set to crash tomorrow, but I'm going to be sharing with you the signs you need to look for in regards to Bitcoin's price as well as altcoins, and also talk about these macro dynamics and where we can really spot opportunity down the line rather than here today. We got a lot to unpack here in today's video. If you happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. Grab a cup of coffee. You guys won't want to miss this one. All right. So I want to first talk here about Bitcoin's price action and some of the short-term changes in supply and demand. Right now, price action over the last week or so is definitely looking better than where it was at for the past month. Really, for the better part of December here, we were trending below the 21-day moving average, using it as resistance instead of support. This to me was an indicative sign that we're starting to see some weakness in the market, but we've slowly inched back above that 21-day moving average, albeit not really in a big way. We're still being held down below that $100,000 price target, which the bulls are still trying to reclaim. Now, I'm not here to berate the fact that Bitcoin hasn't gotten above that. I'm not going to really actually even spend much time on that. The big thing above all is that what price needs to do is hold on this line of prior resistance in the past that's been made support. The long-term line, ascending line of support, which is serving as a base for price right now, that's made up of the two relative highs from back in 2021's bull market. In that case, we need to see that hold here, or we are going to expect a correction into the 100-day or 200-day pocket, which is totally within the realm of possibility, not something overtly bearish, right? That's just how it plays out likely from a price perspective, right? It's great we're above the 21-day, but we need to hold on it. If we don't, and then we don't hold on this line of prior resistance, then we're coming down in for a healthy correction, possibly similar to like the one we saw back here between Q1 to Q3 of 2024. Now, the next thing I want to talk about here, again, outside of just price analysis here for Bitcoin, is taking a look here at the inflows for the ETF. We have seen since back in October that that number is slowing down from around 76,000 Bitcoin back in October to around 45,000 in December. Now, of course, here we are just starting off the month of January. We had about a half week last week because of the holidays. So I'm not here to scare you all with the figure of 6,700. This will go up probably over time, but we did see some days where there was some pretty significant outflows here, and we're obviously probably on course here to do probably equal to December, if not lower. And that's not the end of the world, but it does showcase here that institutional capital is not showcasing the same kind of appetite as Bitcoin's moving higher. And I think this is a big reason why we are seeing prices starting to slow down, because as we've talked about here, you are going to need more demand, more bid side and buy side support from these ETFs as prices move higher. And the higher they move up here, that appetite grows bigger. And if we're not getting that kind of appetite, then prices will likely correct in the short term. Another thing as well, another dynamic that's become just as important as the ETF, is what MicroStrategy is doing. And MicroStrategy, which is taking any opportunity it can get from people who are willing to take its convertible bonds, in this case, these IOUs that either pay no interest over the next couple years or allow you to convert into MicroStrategy shares at a certain strike price, right? Well, they made that huge purchase that was a big reason why we had the performance we had in November. MicroStrategy is now slowing down here. The MicroStrategy premium has declined quite a substantial amount since we started covering it actively over the past couple of weeks as one of the important dynamics to watch for price. This means that MicroStrategy can buy less and less Bitcoin. And unless someone is really buying the dip on MicroStrategy and is going to be willing to take about these new convertible notes, which we haven't seen any announcements, really any big ones, since back in early December, then in this case, we need to be concerned that a big part of the demand equation, whether it be the ETFs, whether it be MicroStrategy, are starting to slow down here. We made great leaps and strides here, but that's baked into the price now. And unless that keeps up, there's a good chance that a correction could come through. That big buy side pressure only likely came because we had that nice pullback from March of 2024 into the summer and early fall. So that dynamic is an important thing to understand here. And of course, it's great to see altcoins, as well as even Ethereum, for example, some large players, Ethereum, Solana, starting to get above their 21-day moving averages. But again, many are still being either held by the long-term moving averages like the 100-day or 200-day. But the other thing to consider here, again, at the end of the day, is we need to be able to make these moving averages that started to act as resistance, support once again. We've had fake outs above the 21-day. So I'm not here to stir up any unnecessary fear or doubts around crypto markets. I think there could very well still be an opportunity here in 2025, but I want you guys to set standards. I don't want you guys to get sidelined and miss when price is not holding on the 21-day and starts trending lower and catch a lot of people off guard. We've seen it back in Q1 of just this past year, how fast altcoins can unwind when things go south. I know a lot of people are obviously excited about what's going on with meme coins. It seems like meme coins are still where the multiple potential is in the altcoin space. There's obviously new emerging narratives like the AI agents or AI meme coin narrative, which again is quite silly, but it is what it is. It's part of the market, right? Have to take it for what it is and see if there are any trading opportunities. But the big thing I want you guys to understand is that while these right now are the best performing assets within the broader crypto space, let alone versus traditional assets, and while we have been talking about taking upon meme coin trading opportunities since back in October of 2023, I want you guys to keep something in mind, and that is to be very smart and realize that essentially on the risk spectrum, like if you take, for example, bonds and treasuries that are all those boring things, or having money in a savings account, and you go all the way to the other end of the spectrum, we start talking about Bitcoin and altcoins. Meme coins, all these new narratives that are driving a lot of the retail liquidity that are stealing the show, they are going to likely be the worst performers when there is a correction. And not to mention Bitcoin, altcoins fit in that camp too. They're the best performing assets of this year. But the question is whether or not they are going to continue being the best performing assets when the market dips. Chances are they're not. In fact, they are likely going to be on the counter end of the performance spectrum. They're going to be some of the worst performing because they're going to have a lot of gains to unwind when we go into a corrective environment. Am I saying that we're exactly there yet? No, but I want you guys to take a look at some of the important data pieces that we're going to cover in today's video. One of them is a custom index that we create within the Dash Report, our newsletter here on the channel, and I wanted to share it with you guys here so you guys at least get some context about where we stand now. Now, there's a certain logic that goes into the data science model, which we describe within the newsletter, but simply put, this is something that is using a consistent set of data science models that I like to track in the market. It's a custom aggregate, and essentially it allows us to get a clear reading for when markets historically have been overbought. This goes all the way back to 2011. And we can see that we're working with practically the entirety history of Bitcoin. We're not changing our logic here. It's the same exact framework here, the same exact inputs. And what we find is that we are right now in the descending band of resistance that is called the 2017 top, the 2013 and both 2013 tops here, the Mt. Gox collapse, right? Even back here to 2011, here in 2021 between March to around May of 2021, as well as the secondary top later in the year in November, as well as the top, a relative top in Q1. We are back in this red band here. And while I understand some people believe, Nick, it's a new paradigm, the ETFs, MicroStrategy, the infinite money glitch, that Wall Street is going to be for Bitcoin, it cannot go down. I think that that is a fool's game. It is a foolish idea to ignore what the data science models are showing us, to ignore what data that we have seen is quite consistent is showing us here. It's showing us right now that short-term we're overbought. There is decaying returns over time. There is a decaying euphoria in the market because Bitcoin requires much more liquidity and new users to be able to make those kind of exponential returns. And this is not me being bearish on Bitcoin long term. It's me saying that, hey, short term, the next couple months, we're probably quite overbought here. And similar at a minimum to what we did back in Q1, we're probably going to pull back a little bit. Or maybe even worse, we might be coming down to our long-term moving averages like the 200 week. We might be going in for a nice solid correction. It doesn't have to be 75, 80% like the past in the same way that the bull markets aren't multiplying over from top to top 10 to 20x, right? Maybe it's going to be a much more moderate correction like 40, 50, 60. But that's something you need to keep on the table here. And don't doubt that it can't happen, right? And don't think for a moment that that can't happen. There's not enough people telling you that that can happen out there. And that's why I wanted to make this video here today. It's not to be pessimistic. It's just to be realistic that there are corrections in markets. There may be a much greater opportunity to get your exposure into Bitcoin. You'll be able to stack much more sats, right? This is something, again, that we cover within the dashboard here. It's our newsletter on the channel. This month's article, we focused on a really big topic, which is essentially focusing on that next buy the dip opportunity in the market. Because if you are focused on crypto right now, you'd be thinking that we're ready for the next leg up. If you're looking across the board at other asset classes, you're seeing some weakening signs here. One of them predominantly is the performance of the broad indices, especially the S&P 500, which has a broad measurement of the performance of the top 500 stocks in the market. We can see similar signs to Bitcoin, struggling at that 21-day moving average. But beyond that, we have the 100-day and 200-day very close here. And essentially, if we can't hold on these moving averages on a pullback over the next, say, week or two, right, depending on how price plays out, then we are likely going down here to the 200-week. We got a long way to go here for price action, right? So considering that, right, what do you think Bitcoin and altcoins, and specifically the narratives that everyone's really excited about, AI agents, which is just a total fake made-up narrative, but at the end of the day, again, it is what it is. Meme coins as well, right? Baseless speculation where you have to hope that there are more buyers than sellers. That's the end game. There's no complexity we need to put to it, no fundamental analysis. Are there more buyers than sellers, right? How do you think that market is going to perform in an event where the S&P 500 doesn't hold on its 100-day or 200-day? It hasn't broken it yet, but we're trying to have these conversations in advance to be prepared for it. Doesn't mean you have to try to short the market or sell everything now, but consider that. What do you think is going to be the outcome of your portfolio? Because during that window of time while Bitcoin was stalling, equities were trending higher here. And in that environment, Bitcoin, meme coins were struggling. Just imagine what it could look like in an event of an S&P 500 sell-off and a broad stock market pullback. Imagine for a moment what it could look like for treasury yields, right? What happens when essentially treasury yields start spiking up and uninverting. The yield curve that everyone was talking about back a couple years ago, with how uninverted it was, no one's talking about it anymore. But the unfortunate thing is that this is the moment where the actual pain comes. And the next few months, when you start to get the yield curve uninverted back into positive territory where long-term treasury notes are paying more than short-term, as they should, this is usually a precursor, an initial sign, a symptom of the times to come, that essentially a recession is coming in the books. We saw this here in 2007. We saw this in 2000, going to 2001 after the collapse of the dot-com bubble. This is the period of time where you should be paying attention, but no one, unfortunately, is listening. No one's focused on these things. So I want you guys to really keep this on your radar, especially with the cross of the 100 month. That is incredibly telling here, that we are really in a kind of high movement scenario here, an uninverting on the yield curve. This was the biggest point increase or difference between long-term and short-term treasuries that we've seen since back here in March of 2023 when we set the bottom in the yield curve. So I want you guys to keep that in mind here. This is a very important thing here, right? So we take a look also as well at oil. Oil's still below its 200-week. It's gotten above the 100-month here, the yellow line, but we're going to have to see whether or not oil can actually get above these moving averages here. If the 200-week, the orange lines, orange and red lines, and the 200-day are going to weigh down price, then oil collapsing lower and lower, while that might help with inflation, is likely a sign that a recession is here, or at least some kind of slowdown in the economy, right? Oil's already been showing us lower highs and generally consistent lows. That essentially is a descending triangle. It's a bearish pattern. It's not a good thing for price, and we essentially need to be prepared for that scenario to play out. If we get above the moving averages, then in that case, that could be a positive sign for the bulls, right? I'm not trying to just pitch it from one narrative here, but so far, price action has been playing out bearishly here, and it's just, I think, a matter of time before this probably snaps down. The VIX also as well, starting to wind up since back in December, right? Holding when it's 21-day moving averages right now. If that really starts to whip back up here towards 23, 26 points, you need to be on high alert, in my opinion. You need to be watching how the VIX is playing out and whether or not it's actually able to hold in this range and doesn't fade. It doesn't. If it fades down like it did before, that's good news. That means volatility is not really able to continue expanding, and the market is cooled down, and people are starting to look for opportunity. But if this is really starting to come up here to this point range, and is moving higher and higher and pushing 30 points, it might be too late at that point. So keep an eye here again on whether or not we get above the long-term moving averages. That would already be an initial sign of concern here to watch also for cryptocurrencies. Speaking of commodities, though, gold and silver, right? Gold has, in alignment with Bitcoin, been one of the top performing assets here, right? It's gone from around 1,600 back here in November 2022 up here towards 2,800 at the relative peak, but has since then been showing some clear signs of topping since back in October. It's trying to hold in its 100-day moving average, but it's struggling also to hold in its 21-day anytime we get a pullback. So that to me is a sign of weakness. And again, we are far away extended from those long-term moving averages where people usually accumulate, which means that we could give up a lot of these gains here. And I have no doubt that you're going to see if gold and silver are declining substantially, as they have been doing right now, down from around 34.80 an ounce down here to 29.70, and struggling to get back above that 21-day, struggling to get above the 100-day, and struggling even in the 200-day right now, right? That means that we could see silver down here testing those prior support ranges at 26, down at $24. What is that going to fare for Bitcoin and the sentiment around crypto? All right. I understand some people believe that these are two entirely separate different things. Commodities, stocks, treasury markets, recessionary risk. Bitcoin, those are totally two different things, right? Well, I'll tell you guys this. You simply take a look at the performance of stocks and Bitcoin. You take a look at the performance, generally speaking, of the equity markets during November, December 2021 down into October 2022 against Bitcoin, and vice versa, the last 2 years of uptrend price action that we've seen in Bitcoin, and you put it alongside the chart for stocks, and you will see a pretty damn striking correlation. Risk on assets move together. Risk on assets move to the upside during good times when monetary policy is easing, or for example, there are narratives that are exciting markets, like for example, the whole AI narrative that's gotten everyone really juiced up. And there are also periods of time where when those hopes fade, when monetary policy gets more tightened, when people have unfortunately had to revitalize or revise their economic predictions for the future to GDP growth or what have you, then essentially risk on assets move down. And I gotta tell you guys, this is the first time since back in the summer where I'm starting to see some really worrying signs with price action here. A lot of time spent between the 21-day and the 100-day. That to me does not look good. The more time we spend there and our inability to hold on the 100-day tells me that we're likely coming in for the real correction here in the near future. So if you guys want to, kind of keep up with that, again, you can check out the Dash report down below in the description. It's our newsletter here on the channel. We have a really great community of hundreds of members who are also sharing their thoughts and ideas in the discussion group, which you guys are welcome to join. It's something you get when you join with the Dash report. You also get the mid-month webinar, so you can always ask me those hard-hitting questions about what you're thinking about in markets, where I'm seeing the opportunity, whether or not I think that something is interesting or not to look at in the market. But I just want you guys to keep in mind, above all, that I get long-term. The market scale potential here of Bitcoin is still probably there. It could still probably keep pace with the S&P 500, and a lot of major asset classes. But the big thing I want you guys to really bear in mind here is that while I understand that market scale potential, even against gold as an asset, people believe it's going beyond just like competing with the major companies, but really going on to compete with gold as a better store of value, a better form of money. I want you all to understand that the percentage annualized return that you are going to get with Bitcoin will almost mathematically here, you might have 1 year that's an anomaly, but generally speaking over time it's going to get weaker and weaker because we're working right now with an asset that is near around $2 trillion in market cap. And the same way gold has been a generally weak performing asset over the last decade or two, the larger an asset gets, the more difficult it is for it to have that multiple expansion, right? And the S&P 500 is a bit different because you got tons of companies, right? You have companies that are constantly leading the way forward in innovation and are growing and the rise of digitalization, right? So essentially, the stock market has been really one of the best performing major asset classes. Bitcoin has been able to outpace that because of its market scale potential, right? We were working, for context here, I've been covering Bitcoin here in this channel since 2017. I bought my first Bitcoin between 2016 and 2017, where at the time Bitcoin was somewhere between a market cap of like 25, $50 billion. It's a world of difference when you're trading at a valuation of $2 trillion, let alone all the other valuation that's poured into the crypto space, into meme coins, and the broader altcoin space as a whole. All the different layer one protocols, all the DePIN, AI, real world asset projects, all the narratives you can think of. There's trillions of dollars of value now in the broader crypto market. So it's a very different landscape here. The multiple potential is not there like it used to be. And we've got to keep that in mind here when we're talking about investing in this sector. It's a world of change. Now, the second reason I wanted to talk about this here today is irrespective of whether or not you're concerned about a recession, doesn't even have to be a recession, it could just be a market pullback. That happens. We saw that in Q1 of 2024. There wasn't really a recession, but Bitcoin cooled down and corrected well over 35-40%. What I want you guys to keep in mind is even if you disagree with that, if you're someone who's focused on making life-changing returns, if you're someone like myself who is a swing trader who likes to figure out where over the next year or two is going to be the best place to park your money, I at least want you to have the thought in your mind that Bitcoin perhaps is not going to be the asset that gives you those returns. Some people are saying, I'm not touching meme coins or whatever. Maybe I'll trade the altcoin sales or whatever, but really like my bet is Bitcoin, right? That's fine. I'm not here to badger anyone for that or say that that's a bad idea. I don't think that's a terrible way to have some exposure to the market, right? I think you should always own a little bit of Bitcoin to some extent. But the big thing I wanted to emphasize is that within our newsletter, we cover beyond crypto markets. We talk about equities. We talk about what's going on in various niche emerging market leader sectors. And one of the stocks that we cover, for example, is a company called Rocket Lab USA, or RKLB. This is a stock that we covered here, and it's part of one of our broader narratives of aerospace and defense stocks that we've been talking about for the greater part of the last year. Well, essentially, Rocket Lab, since we put out a trade recommendation, has essentially gone up around 600% since back in October of 2023. So just a little over a year here, seen a 7-fold increase in its valuation, right? Now, to put this in perspective, right, against Bitcoin, we can see here that since that recommendation back in October, while you do obviously have some periods of time where it underperformed, it came back strong and is up over 133% against Bitcoin. Now, this is not the only one. There are other different stocks out there that we've talked about within the aerospace narrative, and it's just one of many narratives we're covering. The point I want to drive home here is that, especially with utilization of ratios, you can always find these really exciting narratives out there in equities, and it's becoming more and more common now. It used to not be this way about a year or two ago when Bitcoin was, during a bull market, making hundreds of percentage points in expansion from top to top, right? Now we're working with more modest bull markets. And because of that, there are equity, segments of equities or narratives, emerging narratives, new market leaders that are starting to outpace the performance of Bitcoin, or even outpacing the performance of a lot of altcoins as well, with how much dilution there is in the altcoin space. You don't see that kind of dilution in equities because equities usually have to have some real backbone behind them. They're real companies. If you're taking it to being a publicly traded company, there's got to be at least something to it. It's not a meme coin that you can just pop up on the surface of the markets just like that with a snap of a finger and a couple bucks. Right? This is something that actually takes work. And if you're able to filter down to these narratives, as we've done a phenomenal job of it in 2024, I don't want to toot my own horn, we've nailed down a lot of these narratives here, aerospace being one of them. You can find plays that could very well keep up pace with Bitcoin, if not far outpace Bitcoin in the altcoin market. So only say that here not to attack crypto or to toot my own horn or anything. I'm just trying to let you guys know that these opportunities are out there. And if you can expand your horizons in the same way I expanded my horizons when crypto was so niche back in 2016, 2017, most people thought I was crazy. I even felt I was a bit crazy doing it until I got warmed up and understood the potential of the market. a lot of people are a little hesitant to step out of their bubble, which is in this case is likely crypto, which is something they're familiar with, and you may very well miss a lot of great opportunities. So if you want to learn more about this before making any big leaps, if you want to know where we're seeing the opportunities, this month in January we put out a big Dash Report article, much bigger than what we usually do, where essentially we covered not only our 360-degree analysis of crypto, stocks, commodities, and Forex, but we covered a whole range of trade setups and how we're looking for the next dip buying opportunity. This was our article for the month here, where we talk about essentially how we're going to be playing a potential correction into Q1 or Q2 of 2025, where we think the real dip buying opportunity could be for a continued uptrend. There's a lot of opportunity out there in the market, a lot of new small and mid-cap sectors and equities that have the market to scale potential like crypto used to have, that have really exciting trends, fundamentals backing them, and the ability to transform the world in ways we can only imagine here today. So I'm really excited about these upcoming changes. Like both, I also get really excited from like a fundamentals perspective, but really more importantly, as always, it's all about price action. It's all about where I'm going to get the multiple potential, the ability to really make life-changing returns. That to me is the game of markets. I want to be the best performing trader out there. And essentially, my goal is to focus on where those opportunities are and what times of the year are the best to really get them. Could there be that pullback opportunity where we're going to get really great entrance on some of these strong names? So if you guys are interested, check out the link down below in the description. You can get 20% off if you sign up on an annualized basis. I don't mean to push the newsletter too much, guys. I just want to let you know that's an area where we have some of our greatest power users. And it's a time where it's definitely good, especially in the new year, to expand your horizons and look for opportunities elsewhere, especially if Bitcoin stops showing up to the plate here and can no longer expand as it has throughout the greater part of 2023 and 2024. So that's it for today's video, everyone. Thank you all so much for letting me ramble as always. If you enjoyed this video, consider dropping a like. It's a great way to support the content here on this channel. Again, you can always check out the dashboard down below in the description at my website, nicholasmerton.com/dashboard. Hope you guys have a fantastic day wherever you are, and we'll see you guys right back here on the next video. Take care, everyone.